Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, May 23rd, 2023. It's 1:27 p.m. Eastern Time as I'm starting the video. I do want to apologize to you again for the lack of the updates since I've been back. I put together that post for you on Sunday night, returned from vacation. Very long, 3 flights to get back on late on Saturday, and rolled straight into my son's graduation plus some other things. And anywho, as I was putting that post out for you on Sunday night, I started not feeling well, and by the time I was done, I crawled into bed. It was 11:30, and I've never had whatever hit me. It hit me like a Mack truck. It feels like I do have all the symptoms of salmonella. Maybe it's food poisoning. Maybe it's something I got on the plane, but I've hardly been able to lift my head. So I do apologize. It's my head's just not been clear, and it takes major effort to even get out of bed. So I do feel a little bit better today. That's why I'm doing this video. I've turned the corner somewhat, knock on wood. Maybe a little too early to say that, but again, I'll continue to do updates as often as I can, and hope to be back fully online very soon. Okay, I'm going to start out. I did manage to crawl down to my office now, and I've noticed today I had on my phone, I saw a bunch of price alerts come through, and a lot of these are trade setups that I've given you over the past couple months. And I'm going to start out here in no particular order. I just have my alert list going off recently. This one is Race, which is Ferrari, and you can see from these lines here, you have a nice big divergent high, negative divergence there, and you also have a clean uptrend line to short. All the better if you get a nice, clean, well-defined uptrend line. And to add to that, you have some price support right about here. You gapped up. There's a gap right there. Gapped up. It's been trading here. So a breakdown there. Yes, you do have the gap below, but I think a breakdown there ultimately takes it down to this 272.60-ish level, and then minimum target or minimum final target. I'm sorry, let's say my preferred target. That'd be my minimum target. Sorry, I'm still a little fuzzy head. 256, I have it at 256.76, so maybe call it a little north of that to cover, and that'd be a decent trade. Let's see, measuring it for you. That'd be a drop of about 11%. Okay, I also have Costco. This one I've definitely shared with you in the last couple months. I've been watching a big symmetrical triangle. Let's see if the chart's load here. So what I'm doing, I'm going all the way back to, and this may even go to the left of the chart. I've scrolled back to 2018 right here, and you have multiple reactions on this trend line here, right there. And so you have this big symmetrical triangle pattern right there, and that trend line extends. And so that one is just starting to crack today. So that one I had an alert on as well. Based on my outlook for the market, I think you can take it now. Obviously, all the better if you have a solid close below. Sometimes you get these stick saves, but I wanted to share that one. And then targets. Haven't really updated the targets in a while. Let's just say right there, minimum target 467.05. And then 440, that's 449. Let's just round that off. There you go, 449. Next up would be Fiserv. Fiserv recently put in a pretty big divergent high as well. I mean, it's the story of a lot of stocks as well as the equity market. So those divergences are still very much in place. And you can see it has a pretty decent support shelf around, call it, to be safe, maybe 118. And it looks like a lot of thin air down below. So I think you'd get your first reaction right here at about 114. But ultimately, again, a lot of these look pretty toppy, these stocks. And depending on what the market does, I think there's quite a bit more downside potential. Let me give you another target right here. I see a lot of reactions on this line at about 110.90. And when you look at the weekly chart, Fiserv has a nice trend line coming off the 2000 and late 08, early 09 lows right there that may come into play. So that would be a pretty major sell signal if that gives way. But we've got, and it's also a potential target, just swinging down to that long-term trend line would be a good 12% or so. Okay, next up, ISRG. Let's go back to the daily chart. Again, this one triggered a sell signal or an alert earlier today and a sell signal. And again, my apologies for not being around at the time to get it out to you. I think it was plenty of time to chase. And I can't remember if I shared this one in advance. All right, charts are loading slow. I was just going to look at the 1 minute chart. Anywho, targets for Fiserv would be about 290.54 right there, a little bit above that. Always cover slightly above the actual support level. And then roughly, you probably come down closer to the gap. Let me move that line down. But I would, again, cover just shy of the gap if that's your preferred target, about 270.34 right there. And again, certainly the potential for more, depending on what the market does. If we do get that, in the coming months, that 20 to 30+% downside in the markets, then certainly a lot of these guys are going to do that as well. Alrighty, the other one I have alert on today was Pepsi. No, I'm sorry, my alert was first target was hit. This one I did share as a trade idea recently, and it broke down when I was on vacation. I said a sell signal was to come on a break of this trend line, and there was your sell signal right there. That was May 17th, last Wednesday, and so far good for, well, first target was hit. Only about 4%, but now we're down about almost 5%. And the next target is still this 177.13, and you have this uptrend line that comes in together. So there's still another, in my opinion, about another 4.3% downside. Booking.com, BKNG, you had a pretty well-defined trend line here, here. You broke down, there was a sell signal, and you went on to make a back test of the trend line, and the divergence that you had in place when it broke down only grew larger. So you still have pretty solid negative divergence, and that will most likely send this one down double digits. The only other one I had today was AMAT, Applied Material. I believe I covered this one the other day, and this is a trading range right here. And so far, we're starting to crack back down into there. And so if that does prove to be the case, this will be a false breakout, which is what I favor. And you already have the negative divergence. That's one reason, among others, I think the breakout will fail. And that should send us back down, ultimately to the bottom of the range and quite possibly below. And something I started working on over the weekend before I got sick was this, I named it TTW, Things to Watch. And I'm going to be adding to this list, and these are just some of the many things to watch. Treasury bond yields, junk bonds. I'm looking for changes in credit spreads, widening of credit spreads. That's the differential between what treasury bonds are paying and junk bonds. So I'm watching all those. Municipal bonds. California is on my radar. I don't see how they, in the longer term, again, with everything going on in that state right now, spend, tax their wealthy, people moving out. Anyways, if you're a Californian, no offense, maybe my read is wrong on that, but I know they're on the hook for CalPERS. If you guys get those reparations passed through, that's not being paid for by the federal government. My understanding is that's going to be paid for by the state of California. So I'm watching the California municipal bond market, and if you look at it, we're really not far off the. There's the COVID lows. Everything dropped when COVID hit, but you're pushing new multi-year lows, and that's just not a good sign. One reason it's not a good sign is it raises the cost of capital. Municipalities, that's what municipal bonds are, state and local governments. They raise money to finance projects, whether it's building a water plant, schools, whatever it is, and just like you or I, when their cost of capital goes up, it makes it more cost prohibitive. They have to. Anyways, that's that. Let's see. I also had in that list, ADP is one I'm watching. That's obviously payrolls. Let me move this list over here. They put in a divergent high, ADP. It's been stair-stepping lower. Did put in some positive divergence, but longer term, when I look at the weekly chart, this one looks like it's big divergent high here, and it's probably got a lot to fall. I had multiple trend lines, but this is the primary trend line. It comes all the way off the 2008 lows, very well defined. I gave the nickname for what happened in COVID, Ursa interruptus, meaning a bear market that was interrupted. Or, the Fed and the federal government in Washington refused to allow the markets to go down, so they, hit the nuclear button and went crazy, and so it snapped back above there. But a lot of those trend lines, I believe, are still valid. And ADP, because you even had reaction since. And ADP is now below that trend line, and it just put in a major divergent high. It also had a divergent high right before COVID. So as I've said many times, at least what might have been considered a black swan event, technically speaking, the markets were due for a correction. The last time ADP that I had negative divergence on my weekly chart was back here, and it dropped 29%. So this divergence is the largest divergence we've had in a while. And again, more so, this is a tell on the economy. This is the largest payroll processor, so certainly one to keep an eye on. Visa and MasterCard, they're also very telling for the economy. Obviously, when purchases go down and the consumer starts tucking in, they get, every time you swipe a card, they make money. That's their business model. So they just put in a divergent high at pretty big resistance. You had this level here, this blue line, lots of reactions there. And so far they've been unable to surmount that level and just broke this trend line. So with the divergence, I think they're going lower, and we'll just watch this. It's not one of my favorite trade ideas. Again, it's just on my things to watch list. So you want to watch Visa and, of course, MasterCard as well. Same story, pretty much. It was back here about a triple top, and we almost came to that level again, so-called a quad top. And these are the measured targets I have had for quite a while, but you need to break the downside. You need to break this level, and then reaction low. FedEx, one of the good tells on the economy. Obviously, when things shipments go down, then shows the economy is most likely slowing down. And sure, there could be some unique issues just to FedEx. That's why you also want to watch UPS as well. And like so many, they've peaked back here in 2022, and they're still stepping lower. IAI, broker dealers, I've covered these extensively recently, and that one already broke down. Really, it's this level right here, about 85. If that level goes, that should open the door for another leg down in the broker-dealer stocks. XRT, of course, retail. The consumer retail spending accounts for 2/3 of GDP. So you certainly want to watch XRT and the companies in there like Amazon, Walmart, Costco, which I already covered, TJ Maxx, Target, and all those other companies. And I just had an alert on Alphabet, and I don't know where my trend line was, so I'm going to click on that. I don't know if you heard that little bell going off. Okay, so this is really goes in line with the theme or my theory. Before we even popped the recent high, the top of my max bounce target zone on QQQ, which happened over when I was out on vacation, I told you it wouldn't surprise me at all if they run up there and pop it. That's more common, especially in a strong up move, that you go through and pop that level, and then if you fail it, then this was all just a momentum fueled overshoot, false breakout. So that was a big level to me, and still is. So the alert went off, but I have it pretty tight. Basically, the farther you see Alphabet get away from here, the more likely it is to take another leg down. Copper, that's certainly one to watch. This is, I believe, holds copper stocks, but they're going to track the price of copper, and you can see put in a divergent high again, like so many things. So at least the majority of things I see point to the fact that this was a bear market rally, and the bear market is most likely over. Copper's also, copper itself is a commodity, and that could go up over time if we have a hyperinflationary environment coming. But again, it's always been a pretty good tell on the economy based on its importance of in industrial use. Everything that gets all buildings are being put up. Copper goes into a lot of things there. So I'm just marking things up here, and you have this reaction low we're coming up on now. But you can see it's been falling pretty sharply lately after putting in that divergent high. All right, a couple more and I'll wrap this up. I'm really not feeling so hot. Life insurance, I told you to keep an eye on those. And there's select insurance companies. Some are looking better than others, but I'm looking again for areas that could show cracks in the system. I know all eyes were on the regional banks, and that's what I said a couple of weeks ago. That was done. That trade was over, and if anything, you could have took that as a hedge to any short positions because it had the really nice charts. So maybe I'll get to that in 1 second. But and it's still worth watching those regional banks. If we get another big failure, that's going to be no bueno for the stock market and for the economy. This is SOXX, just trying my patience. Still an active short on the site. We shorted it here. Right here. And it came to that level, and it came to that level again. And I still maintain we already hit, it's not like it didn't play out. We already hit our second target. It was a profitable trade. But we're just back to where we started, and I still maintain these additional targets, very much so. Copper, it's just another ETF, ETN. KRE, there's the regionals. Like I said, beautiful divergent low and right to resistance right now. So, again, I don't have much of an opinion on these, where they go from here. That divergent low, you got the pop already 22% in the sector, but I don't think their problems are over yet. So I'd be careful. Positive divergence in a bear market, be careful of that. It's kind of like the old sailor's myth with the mermaids. The sirens would call them into their death. They were so beautiful, and the sailors would jump in the water and die. And so be careful about sectors that have some real problems fundamentally. And you could certainly trade it for a bounce. But at this point, at very least, just raise stops. If you think this is going to go up more, just tighten your stops and let it run. PSP going nowhere. But again, it's not as if it didn't pan out. We shorted this one, I don't know where exactly, probably back here on that trendline break. Hit the first target, hit the second target, almost made it to T3. And it's just, consolidating. This has been a slow roll in the market, if it is that. And I do think these are targets I still maintain, so I still like that one. Caterpillar, this is an active trade. And I put it in this list of things to watch because I'm watching certain big industrials. That's another tell on the economy. You want to see John Deere and Caterpillar and a lot of these companies doing well to support the theory of economic growth. And so Caterpillar, we already hit again. It's already profitable down to the third target, and I've added 2 additional targets. I added those back in March, and I think we're going to continue to work our way down there. So a couple more. I had ITB, Home Construction Index. This one is set to. This is a trade idea too. Keep an eye on it, and you have a beautiful bearish falling wedge, complete with your negative divergences. And my first and minimum targets right there. I think you'll get a hiccup right here, little reaction around 71, 72, but I would swing it down to at least this level. And again, everything I'm talking about price target wise, they're fluid. I'm giving you initial targets now. If the market does what I think it might do over the next 6 to 12 months, then a lot of these guys may go down and even take out the previous lows. I have 2 more in that list, and again, I'm going to continue to add to it. Auto and truck dealerships. And there's individual stocks. I've already gone over some of those before. And then specialty finance I added as well. And you can see specialty finance has just been stair-stepping lower, and it's closer to its multi-year lows than it is to its multi-year highs. So that also speaks to what's going on, in the economy, despite, this big rally in tech stocks. Apple and Microsoft and Amazon or Meta can't carry the world on their backs, or the rest of the stock market on their backs forever. Okay, this will be a short video. I'm just going to wrap it up here with NQ. This is the same 60-minute chart we've been looking at. This to me, the biggest level on NQ is right here. This is a big level. We had a breakout. That's 13,366. There was that trading range I was talking about for quite a while, and we broke out, and we're comfortably above it now. So again, I said this 100 times before, it's not an all-in moment, short moment for the Nasdaq or really the markets as a whole, but it would be if this breakout fails. The fact that we have the negative divergence that we had in place before has only grown larger. It's not been taken out. This is a 60-minute chart. To see it well, you really need to go over to a daily chart, and that's what I'll do now. And there it is. That's my busy board. Let me find a clean board. Well, I'm just going to draw. This is my fib board. You can see QQQ is right around the 50%. Remember, as strong as this rally may feel, this is only a run-of-the-mill typical bear market rally or a counter trend rally. What I believe to still be a bear market rally, retracing about 50% of the entire bear market that so far ended with the October lows right there. But let me just show you here. This is the divergence that's still very much in place. And it was those same divergences that marked the top back here. We had divergences on SPY and QQQ and everything else. And we still have the divergences on the other indexes as well. So that's it. And there's a simplistic view. You can draw a little trend line like that. Watch that as well. But I really want to see, like I said, a move back down into that recent trading range right there. And then down out through it. And that's even better. Okay, I'm going to wrap it up here. I'm not feeling so hot, so I will, like I said, when I'm feeling okay, I'll get up and do some things. I think I've hopefully turned the corner today. And again, my apologies for the lack of updates since I've been back. But, just give you a handful of trade ideas as well as things to watch. So we'll go from there. This has been Randy Finney with Right Side of the Chart. Have a great day.